Happy Tuesday, traders. Good morning. It is 8 a.m. Chicago time on the 17th of January, 2023. This is episode number 2393. A quick mic check, please. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, looking at the pre-market summary sheet here, really overall a mixed market, completely balanced overnight in terms of the risk assets. Looking at the indices as the key risk assets, really sideways. This morning we got Morgan Stanley and Goldman Sachs. Goldman performed quite poorly. Goldman missed by 39.42%. Goldman came in at $3.32 versus $5.48. This looks a whole lot like a tax write-off. In fact, I don't know, correct me if I'm wrong, but has Goldman ever missed this badly, ever? Because to me, it always seemed like Goldman was the golden child and always made money. But it just seems odd to me that they would miss by almost 40% on earnings. Such a titan in the space. Morgan Stanley also reported. Morgan Stanley beat by 10%. They reported $1.31 versus $1.19. Now, these are the heavyweights in the financial industry. There's also Citizens Financial Group, much smaller. They're in line. Interactive Brokers reports after the close, along with United Airlines. United Airlines expected to report $2.10. Airlines have been showing really strong earnings, $12.23 billion for United in terms of quarterly earnings. We are right in the middle of the earnings season here. Earnings are very key right now in terms of releases. What's driving things? China reported GDP or growth at the lowest level in decades. Really, I think they came out at 3%, something like that. German CPI in line with expectations, which is lower than the prior. And then key Bank of Japan meeting today. Really, in the overnight session, Bank of Japan is going to report its rate decision and quarterly outlook. This is a big play here for the macro guys. Everybody's paying very close attention to Japan. They're concerned they may start tightening. Japan has been the one loosening all along while everybody else was tightening. The other big piece for this week is this U.S. debt ceiling drama, with the House being controlled by Republicans by a very narrow majority. There's likely to be a lot of political wrangling to get the ceiling adjusted. Of course, if the ceiling isn't adjusted, then the U.S. government has to shut down as it runs out of money, or not money, but credit. We're also, the other piece, long weekend, lots of news. The other piece is deflation pressures. There's an article in the Wall Street Journal that I read about consumers just not accepting higher prices, basically looking for alternatives or simply not spending money on those items that have become very inflated. So there's some clear deflation pressures, especially in the autos. You probably heard Tesla cutting some of their products' prices by as much as 20%, which is heavy for a car manufacturer for several reasons. It is trying to maintain its dominance in the EV space. A lot of there's been growth in the auto sector. The only growth in sales has been in the EV space. So there's a battle going on there, and the result of this battle is deflation in autos, which is a big portion of CPI. Great Britain unemployment in line. German zoo sentiment came in much stronger. Was expected at like -15, came in at +16. Big boost there. And then, of course, today, Davos World Economic Forum in Switzerland, Schweiz. starts today, and there will likely be commentary and news events as a result of that. Central bankers and hedge fund managers and financial institutions all meet up and cozy up. For today, the calendar's relatively light going forward. We did get the inflation rate out of Canada at 7:30 Central, 8:30 Eastern at 6.3%. The expectation 6.4, prior 6.8. So that's falling as well. The same with German inflation, came in at 8.6 versus 10 prior. So we're seeing deflationary pressures there. And then what's left is Fed's Williams at 3 p.m. Eastern, and then we have the numbers out of Japan. Okay, turning our attention to the rotations. Notice these rotations have been falling, all arrowing down, volatility falling, and that is kind of indicative of the kind of market that we're in. Bullish markets tend to sap volatility out, and rotations have been falling. I think it was 7 last week. It's 6.5. Now in the ES, the rotations in the NQ have dramatically fallen, dramatically. It wasn't long ago that it was a 34, 35 points per 1 minute rotation, top to bottom. Now 22.75. We're also seeing that in crude. Crude was 30 cents, now 27 cents. Just be aware of this. This information, if you don't understand rotations, this information is intended to inform how we set targets, how we set stops. Like if your targets are really, really aggressive and the rotations don't support them, then you have to wait for several rotations, increasing your risk profile and so on. The S&P, real quick, statistics-wise, is balanced. We have a balanced market in the overnight session, completely sideways. The inventory is 100% short in the S&P, meaning 100% of the volume took place underneath Friday's settlement, which was 40.1775. The range is 17 points. This is the smallest range we've seen in a long time. We have not seen this small a range in the S&P in the overnight session in probably 6 months or so. Likely to be a very, very quiet session today. The point of control shifted to 4,007. These are just general statistics that you should be aware of. And then looking at the statistics overnight, we're seeing the volume mode shift up to 230,000. Again, we're at 157. So much lower. The overnight session volume is much lower than what is common. And then the range is 60 points. That's increased as well in the overnight session. More action from China and Europe increases the overnight range. So that's the kind of overview. Let's look at the charts. The charts to start out, the S&P, really nice rally on Friday. Whoa, what's going on with this blue? Got a new computer. Let's see if it holds up. The charts are the action on Friday after selling off. I really expected this thing to at least test to the downside. It did not bother at all. It tried to shift lower from the open, but was well supported. Really nice pullback to the mid over here. And just generally taking back the entire overnight session sell-off on Friday. It was a grind higher. By the shape of the profile and where we closed, this was a trend day up. You could see the shape of the profile such that you had multiple distributions, multiple acceptances of price. And so overall, did I get the settlement wrong? Is that what you're saying? Oh, yeah, I'm looking at the wrong number. That's right. It's 40.18. It's right up here. The close was 40.1775. Appreciate that. So the only thing that's missing from Friday's action is we didn't shift the point of control to the upper end of the range. A shift in the point of control to the upper end of the range tells us that there was a substantial amount of strength coming into the close, and it's likely to push us higher. The delta got absolutely trashed on the close on Friday. There was a ton of selling. Let's expand this. Look at that delta on the last this consolidation into the close. Delta just screaming all the way down to negative 14,000 from positive 3,000. That's a pretty big swing. A lot of selling into the close. And Friday was OpX. No, it wasn't. It wasn't OpX. OpX is this Friday. Sorry about that. So yeah, I was reading too much into that. But the delta just got crushed on Friday, and then we opened back up. We kind of trade more than I expected in on the holiday yesterday, Martin Luther King, selling off on the European session. Then we take all of that back, and then what we've done since is just trade completely sideways in today's overnight session. You can see the profile overnight completely balanced with the point of control, the overnight point of control, the full session VWAP, full session mid, right on top of each other, and just holding sideways. This doesn't bode well for the activity for today. So the expectation for today is we're likely to kind of probably grind to the upside and re-challenge that 4024 to the upside. And to me, it just doesn't look so great in terms of an aggressor market. It has come a long way, and it's kind of sitting sideways. Here's the TPO chart for the ES. We had a nice break, recall, continuation, consolidation, and kind of an odd day. We left a gap behind, and we have been putting in higher lows, higher lows, higher lows, most likely higher lows today. This is yesterday. I can't selectively erase data, but yesterday's trading during the morning session should be wiped off the charts. That's something they're going to work on at Edge Pro X, to be able to just select periods of time to remove data, because I don't want to see this on here since it never happened. We did not have an RTH session yesterday. So overall, we had nice balance for 2 days here. We are sitting right on top of that 39.92 area now, 39.93.75. This 92 area right here. This is a big magnet, and my expectation is we are likely to test yesterday's high and fall right back in and kind of close sideways, probably close to the 4,005, 4,000, even the millennial figure today. That's the key idea behind the action that's expected for today. Is I'm looking for really to try to grind higher, put in a high, and then pull back and kind of hold sideways down here at the 4,000 level, right in this area here. Really not expecting very much for today. So just I'm very often wrong, and that's fine. I don't mind being wrong, but what we don't want to do. Hang on, let me raise my table a little bit. What we don't want to do is come in here on a day that only has 17 points of range and look for breakout trades, because that's the only hammer we have in our toolbox. This is the kind of day where we'd be looking for extremes in or outside in type of trading. Okay, so this is what's setting up for the S&P. Look at the detail in the S&P. So we're going to merge this profile in. Look at that ugly looking, looks like a seahorse. Oh no, I'm going to have to do this, guys. I'm really sorry. It's another guy smoking a blunt right there. Um, anyway, the profile shows that we are above acceptance across the board, so I'm expecting it to kind of push up, but I am expecting it to fall back in and kind of drift downwards towards the 4,000 in the S&P, and that's because we still have balance here, and there's just not enough to throttle away from here. What's the news that's going to cause us to throttle away from here and push higher? The expectation is that we are likely to just kind of sit sideways and wait for the next piece of input. Again, we have some risk overhangs, the US debt, Bank of Japan tonight, and several other things. We still have this China reopening, which everybody's very positive about and has caused us to break out of this big area down below. We're getting pretty good numbers in terms of inflation abating. There's still inflation. It's not negative. So prices are still going up, but they're not going up as fast. There's pressure there. So those are kind of macro indicators. The price-based indicators is that look at these balance zones. They're within range of each other, right? We have a lot of balance beneath us. We have a lot of acceptance beneath us. So it'll take quite a bit for this thing to rocket out of here. It would take a fair amount of energy and pretty good news. The week doesn't have all that much news. We get building permits tomorrow. We get comments from Davos. We get the inflation rate out of Japan. We get GfK consumer confidence out of Great Britain. We get retail sales out of Great Britain on Friday, existing home sales. Nothing really dramatic other than, of course, the fact that we are in earnings season now. So we're going to pay special attention to how the earnings look. The market has already softened for earnings, and they've been okay so far. So that's where we are in the big picture. Here's the NQ in the big picture. As we had discussed, as long as we move away from that 11,050, for those who've been watching for the last 2 weeks, we talked about this, that this becomes this 11,050 area, which is actually way down here, this base here. As long as we stay above it, we are likely to tease the high, which we did, and then we're looking for, do you remember the number for the NASDAQ on our price map? 11,800 is the next key balance price above. So the NASDAQ is throttling up, but the NASDAQ's relatively weaker, much weaker than the S&P. It is still struggling to get out of this multi-distribution range. The overall picture in the NASDAQ is it's really, really trying to climb, but there's a lot that's kind of working against it. Tesla has been a massive drag on that index, and a few others. And so overall, the NASDAQ did finish strong, but still, it is not kind of facilitating discovery to the upside as easily as the S&P is. Looking at the daily profiles, here it is. You have pretty good price discovery upwards. The one-time framing is up on the daily, so the trend overall is up. But I want to show you this chart here from my IRT, Investor RT platform. This is my Edge Pro X is my active trading platform, execution platform, and then kind of short to medium range charts. IRT is kind of my think tank software. It does a lot of things right, like back adjusting data and things like that. But if you look at this, the black or the very dark represents alternating months. So this here is a month. So that's the month of December. And now we have gray, which is January. So it goes gray, black, gray, depending on the month. So what this tells me, the difference in shading between black and gray, is it tells me where we are, where the current month is versus the prior month. And you can see that the prior month had a pretty wide range, right? 41.42 on a back adjusted basis down to 37.8850. We're in the middle of the month, right against this this point of control, and that point of control, and these are volume profiles, by the way, that point of control is predicated on the last swing high. So I'm taking a composite from the last swing high all the way to the present, gives us this micro composite here. And the micro composite point of control is 39.8950, and we are just we're just above that, not by much. We're only about 20 points, 23 points higher than that. So my point being, this is very likely to pull back into that range. So we're likely to continue to put in higher lows. The weekly in the S&P, so the monthly is sideways. The monthly is sideways. We did have a higher low on the month, so the time framing on the monthly is higher. The weekly is higher, and the daily is higher. It's one time framing up. So there's pretty good trend across multiple time frames here. So this further supports the expectation that we're likely to discover higher. Let's look at this for the NQ. This is where my range statistics come from and so on. You look at the NQ, same thing. Still sitting in the middle of the month. Let's get rid of this profile. Still sitting in the middle of the prior month, one time framing up on the daily and weekly. However, the NQ broke the one-time framing on the monthly. Again, it's relatively weaker, and this is part of the reason why. So that's that. I will stop talking about this and look at today real quick. Today, I don't have real scenarios. Open auction, I'm expecting this thing to just be in this poopy sandwich in the middle of the day, and then I'm expecting an impulse higher to push to the overnight high, and I'm expecting it to challenge last week's high of 40.24 to push higher and then come right back down and settle in line. That's the key scenario of today. If it fails to do so, we do have pretty good cover, a pretty good run or distance to run on the downside to 92 and 89. 92 and 89 become the key targets. The NQ, same story, pretty decent hold, opening inside of the overnight point of control. Full session view at fill session mid, so we're expecting a choppy, quiet, just a chop fest open. It's a great open to get emotionally involved and to really, really damage your account. So just be wise, be a smart trader, and just stand by and wait for that first impulse. Again, looking for it to attempt lower, looking for an impulse higher, take out the prior day. We have a gap to settle trade both in the ES and NQ, so I'm going to be looking for that. And then later on, I expect it to kind of challenge to the downside back to the 500 area. Crude has been very, very interesting for those who are trading crude. Crude breaking out again to the upside. There's a monthly report, I think, that's due today. Let me move this out of the way. There's a monthly report due today from crude. Crude breaking out higher, and it's challenging this big top right in here in the 81.20. It's at 81.10 is the high, 81.11 or so far. Crude just ripping up, and this is the China play, right? Crude, China, crude, China. There's the demand is expected to increase. Production is kicking up. People are back at work in China despite the heavy COVID numbers, and crude is a beneficiary. So is copper, silver, lithium, palladium, platinum. All of these commodities are going to be in demand, and we're seeing that respond. So crude so far has opened in what is an open drive and has pushed higher. Crude is not one you want to fade. We do have a nice tweezer top here, and we're pulling right back to the mid full session VWAP, but crude is maintaining strength. Crude, I've been bullish on crude for a while since the break away from that low a few weeks ago, and it just continues to chug along. So buy your gas today. Crude just likely even if it pulls back, is very likely to continue to drive higher. Busy week this week. Good luck, and hopefully you pick something up today. I'll catch you tomorrow morning. Take care.